Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about 3 Chinese stocks that I think may be worth taking a risk on. So some of the things that we've seen over the past 2 weeks is there has been an increasing tech crackdown in China, where we've seen a lot of regulatory pressure as well as a lot of PR type of news, where we've seen Chinese tech stocks have been absolutely taken down. And the Chinese market as a whole, we saw an 8% overnight move here on the East Coast, where I woke up and the Chinese stock market was down 8% from close yesterday. And what you see here on the screen with JD.com Inc. is the ticker symbol for the U.S. holding of the company. So whenever you see ADR and you can see the ADR fees, this is a company that has listed here in the United States for the explicit purpose of raising capital to use in their main business. Now, one of the things that I generally speaking am concerned about when I'm investing in ADRs is there is a fee to invest in the company that's generally between 1 to 3 cents depending on the broker. But the other portion of it is this is not the primary holding for that company. Again, if you're going to reward your shareholders and you're a company listed on the Chinese Stock Exchange or the Hong Kong Stock Exchange, then you have an ADR here in the United States, what is your incentive to reward US shareholders? And that incentive is not always there. So what I'm going to be looking at here is there a risk-free trade or a risk trade that I feel comfortable going in on overseas that I feel like is going to warrant the potential risk associated with it. And there's 3 companies in particular that I really like from a fundamental perspective, and I recognize that China is currently growing their GDP by 20% of the world total on an average basis. So what that means is that that country is growing, and as a percentage of the world total, their market share, to use a term associated with a lot of the stock market, is growing at 20% annually because they are growing so quickly, and I want exposure to that market. And the first company that I'm going to be looking at is JD.com. This is a company that is heavily involved in 10 different areas. They're all over the place, but primarily they're online retail. And the fact is that they are growing incredibly quickly, and they have the capability to showcase or to share a lot of what Shopify is doing, but in the Chinese market, as well as what Amazon is doing in the Chinese market. So they're one that I'm primarily going to be looking at. Another peer that is in the same vein as them that I'm going to be heavily focused on is Alibaba Group Holding. This is the group that was founded by Jack Ma, one of the most well-known entrepreneurs to ever come out of China. And they have just been getting pummeled over the course of the past 6 months, really 9 months if you look at the chart associated with them. But they have very strong fundamentals associated with the company. They continue to perform very well, but that downward pressure just continues to pummel them from those Chinese regulatory agencies, as well as just that public opinion associated with the company. Again, this was a group that nearly a year ago was over $300 a share. That's not to say that that is why I believe they could get back there, but if you just look at some of their fundamentals or even the income statement here, you can see that they have primarily been profitable over the course of the past few years. You can see that here where they have been losing money, that's been primarily due to fines, as well as the fact that they are having to invest heavily in R&D. But the company made $188 billion in a single quarter at the end of the year, or at 3/31. They are profitable, and they just have so much cash on hand that I really think that there's still a lot of potential for the company going forward when you're sitting on nearly $321 billion in cash. There's just so much to like. So these are 2 of the behemoths in China that I think have a lot of capabilities going forward. And the last one is going to be Baidu. This is a company that I have done a number of reviews on concerning the stock. We have made some options plays on there. We have gotten in and out positively, which I'm glad that we did, because last time I talked about them, they were on the climb. They approached that 200 breaking point in June, and now you can see that they have also suffered. But when we look at the valuation associated with these companies, a PE ratio of 8 compared to an industry of nearly 40, price to sales of 3 compared to the industry-wide of 11.5, there is a lot to like about these companies. And for that reason, I want to be able to have a piece of that going forward when we're trying to evaluate, does it make sense to be involved in the space? By no means am I encouraging you to go heavy into the Chinese stocks, but I do think that there is the potential for significant long-term gains instead of just trying to play the short-term volatility. I would not recommend putting all of your money in at one time, but rather dollar cost averaging over the next few weeks, as there is a lot of potential going forward. That being said, I'm by no means a financial advisor, and I'm just some guy on YouTube. So when I'm looking at what I'm going to do, I will be posting any of that in the Discord, which is in the link in the description. And I do anticipate that I will be making some Chinese stock plays by going in at the share level instead of looking at it from the perspective of a long-term leap option trade or something along those fronts. So if you have any questions, feel free to drop those in the comment section down below. And if you made it this far, let me know by leaving a like and a subscribe. Thanks. Talk to you later.